Next is relative strength index. Now this is not oftenly used as a standalone indicator, but it is a very popular indicator which is used. Okay, normally people use it to get an assurance about whatever predictions or whatever planning or whatever decisions they have taken based on candlestick patterns or some other indicators also. So it is a supporting indicator, but it is a very commonly and a very widely used indicator. Now, how do you use RSI or relative strength index? Before we get to how do you use, let's understand what is relative strength index. So relative strength index is a momentum oscillator. Okay, basically it tells you whether the direction which the market is showing you, or whether the price at which the market is right now, okay, whether that is justified with the kind of speed with which it is trading. Okay, so RSI will basically show you overbought, oversold positions which you have to understand. So if the market is overbought, the traditional thinking is overbought markets are exhausted and you should not enter into it. However, my prediction is that if a market is overbought and if it is for a very long period overbought, then this shows you a buying opportunity instead of shorting. Okay, if the market has been overbought for a very long time, that means there is strength in the market and therefore you should look for buying opportunities. Okay, same is vice versa. If the market is fixed in an oversold position and it is continuously maintaining that position, it shows strength in the shorting and therefore you should short during that period. However, once you see that the momentum is changing, for example, if you see that the RSI value has now started moving from the oversold position towards upward positions. Okay, so there you will say that, okay, now I think that there is a buying opportunity, and vice versa. Okay, so now how do you understand oversold or overbought? Okay, so this is what we will look at now.